Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Wednesday, August 5th, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. On the markets today, I want to tell you about this rally that we had at opening on all indices. Well, this rally was led by 2 factors. The first factor was the manufacturing PMI, non-manufacturing PMI data that came out in Europe. Most of the countries that released their data actually had a slight decline compared to the last reading. However, most of those PMI readings are still above 50. What does that mean? That their economy continues to grow. So this is something that's positive for France, for Germany, for the Eurozone, which all have above 50 reading for the PMI non-manufacturing data. Also, we had also another thing that came out today with the ADP employment report, saying that we created 185,000 jobs. That's way lower compared to the last reading, where we created almost 230,000 jobs. And that's actually below estimates that we're expecting 210,000 jobs to be created. So this is actually bringing some optimism in the market that the possibility that the Fed is going to raise interest rate in September is not going to happen, because we have negative data, well, not negative, but disappointing, I would say, data coming out of the ADP employment report. But we also have to take that into our perspective, though, because the chairman of the Fed of Atlanta said that we'll need to have a catastrophe in the U.S. markets to actually not raise interest rate in September. And that man who talked today is definitely a Fed member that people actually look forward to, because he's actually a voice that combines both ends of the spectrum, the hawks and also the dovish members of the Fed. So eventually we're going to have a rate hike, except this is a catastrophe. Today, if we take a look at the situation, this rally, what we said on MarketGurus.tv is to not rush in to build up all your long positions, but to rather go in gradually. On MarketGurus.tv, we still have some exposure among some bearish ETF. We continue to hold on to them. And with today's decline, it just confirms that the strength of this bullish momentum was not as strong. So this is a situation everywhere where there's a slight massive sell-off that's happening there. on the market. So you hold on to your bearish ETF. That's the strategy. Now, let's take a look here at some sectors that have helped this rally. One particular sector that we talked about on MarketGurus.tv that you can have access for free for 10 days is the steel sector. Because on the steel sector, we had some new breakouts, such as Steel Dynamics. The thing is, in most of those breakouts, for instance, in Steel Dynamics, I think you can build up your long position on that stock as an exit point towards $20 will be appropriate, or $20 is the exit point on that stock. Reliance Steel made an attempt to break out, lost its upward momentum. Reliance Steel has a target towards 64. So you could build up your long position, let's say by a quarter or half of a position on a stock like that. And of course, always put your exit point at $60. But don't expect that you're going to be in a buying spree, buy all those stocks, full positions on them, and expecting them to surge by 20-15%. It's not the situation that we have right now on the resources, but just a moment to continue to build up your position. For instance, ArcelorMittal, it's a clear breakout there, but look at this. We have tested the 50-day moving average and we went down. That doesn't mean that this breakout is not of quality, but that means that you could actually buy some positions on that ArcelorMittal today, but make sure that you put your exit point whenever the stock reverses this short-term upward trend. So if ever it goes below $9, you close that positions. So we might stabilize there, but you could build up your position at those level on a stock like ArcelorMittal, even if it's bounded by its 50-day and 30-day moving average, and it could pause. But buying now, it's still a safe, not safe, but it's still an okay timing, a great timing to do so. Now the energy sector, though, we had, first of all, I want to talk to you about the solar sector, where we had some stocks that rose. For instance, we have China Mingyang, which is a clear breakout there. China Mingyang target now becomes towards $3, so 30 cents to be gained on a stock like that. For day trading, it could be active at 272, 273. It's going to be a great entry point because it's still neutral. Your exit point is at 260 on a stock like China Mingyang. But right now with this overbought situation, I believe that a correction is more likely intraday wise. But for swing traders, I definitely think it's a go, but $3 is your target. We also have other stocks like ENPH that slightly stood out, but right now it's staying neutral. 630 is the new entry point for day trading on a stock like ENPH. Now, we also had an attempt by the energy sector on the Canadian side to start a potential bullish cycle. So we published this list on MarketGurus.tv, but the movement has aborted. If we take a look at the sector here, for instance, we're still neutral. Now we're putting some pressure on the support. We had Suncor at opening that rose, that broke out, but false breakout. The stock got back within its neutral formation, so it's still a false signal there. We had also Pacific Rubials that broke out, but you see it lost all its upward momentum. Don't forget that Pacific Rubials, the biofra has been canceled on that stock. Therefore, even if there's some breakouts in that stock, though, you definitely have to be doubtful that this breakout can continue, because we know it's a company that still has a lot of problems in terms of liquidity, in terms of their project in Colombia, and the fact that it didn't get bought, it's something that can be a little bit worry, right? And right now, Pacific Rubials, in terms of quality of that breakout, I'm not so sure. Definitely not so sure. If it does continue, we know this breakout could head towards 430, but I definitely doubt it could do so. Now, we got another stock, that Keyera Corp, that made an attempt to break out, right? But finally got back within its sideways formation. Same thing for Cenovus Energy. And the fact that we had this failed attempt to start a bullish cycle by a lot of energy stocks, it's still a good thing, because what it will do, it will simply confirm more and more a clearer sideways formation. And don't forget the theory, the longer we stay within a sideways formation, the better is the technical signal that comes out of it. So therefore, those stocks should definitely be put on your watch list, even if they didn't break out. So I'm talking of stocks like Cenovus, Whitecap, Transglobe, Imperial Oil, Raging River Exploration. So all those stocks, though, they're still neutral. And for instance, if ever we have a wave of buyers that's coming in, you see Raging River Exploration at 825. It's a clear, nice buying signal, because it will clearly reverse this downward trend. Now, concerning the technology sector, it's also a sector that has been strong. We had some stocks like Celestica, Constellation Software, that is on the verge of breaking out. CRLS also as well, which is neutral, but so far failed attempt to start a bullish cycle. also want to show you here, because in the US situation, look at the NASDAQ. It's one of the best performing index, the NASDAQ, while the Dow Jones remains weak and the TSX attempt to reverse this downward trend has failed so far. But on the NASDAQ, if we take a look at this bullish momentum that we had here, it was mostly led because of major caps such as Google. Nice breakout for Google. Those of you who were eyeing Google for a while, I think definitely today is a great entry point. 620, 625, below that support, you get out. Facebook could be next on the line, 97.50. Actually, Facebook on MarketGurus.tv is on the list of the stocks that could break out or break down that we publish on a daily basis. So definitely Facebook, if ever we have a wave of buyers that's coming in, 97.50 is going to be the go. G2 Global Communication, wow, clear breakout on a yearly basis. Yeah, so you know, exit point now becomes at 65. So it's a big loss potential. Or you could say, you know what, I'm gonna stick up to that trend and get out at 68 instead of getting out at 65. That will be a way to minimize your loss potential on a stock like G2 Global. Cena could be next in the line as well if ever it goes above 42.50, but so far we have a lot of room to go before this can happen. So basically, folks, what we have a failed attempt of a bullish cycle by the energy sector on the Canadian side. We have some stocks in the steel sector that were active, but as I said, it's a moment to just build up your long positions, not be in a buying spree. Seller stocks, some of them have been active for day trading, but really we want to see a new high intraday on some of them. I'm talking of a stock like MY on New York or ENPH on NASDAQ. Those stocks could continue to remain active for day trading only, not for swing trading. Now let's take a look at some questions here. Someone bought Dust. Anand bought Dust yesterday. Went down today. What do you suggest? Well, you should continue to hold on to Dust. There's no need to close that position. You did a great buy. Right now, the ETF continues to maintain its upward trend. If we take a look at the sector, it continues to be weak. The gold as well as the gold sector. So far, your bearish positions on Dust, you should continue to hold on to it. And that's a strategy I've said earlier on the show, that our bearish ETF that we have in our analyst shorts portfolio on MarketGurus.tv, we're remaining patient and we're not closing them today.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So we have another question here from Steph. Hi, GIB.A. Would it be a good entry point today for the long term? It was a question from yesterday. Now, for the long term, I could understand that you want to get in at the low of this downward corridor, and just in case the momentum could continue, you'll get that stock at a cheaper price. But if you're staying long term on that stock, where are we right now? You see that this is the downward corridor, a clear downward corridor on that stock. Right now, we're reaching the top of this downward corridor, which is a point where we could actually have a correction. Now, taking a look at on a daily basis on that stock, we see that all those moving average are meeting there. 150-day moving average are all meeting there around 51. Therefore, should you buy that stock right now? Personally, I think that at those levels, it's really likely that we might have a correction around 51, 51.60. So there's not much room to go. I think you will be better positioned if, first, you wait for the stock to stabilize around this level, $51, and then confirm a breakout out of this downward triangle formation. Or if ever the stock reaches that point, doesn't stabilize, and goes back down instead, well, get into it whenever the stock reaches the low of this downward corridor. And one tool you can use to determine is that stock confirming a bottom, I think you can definitely refer yourself to the stochastics, because so far the stochastics have played out to be pretty great indicators as to when the stock is confirming a bottom. And you see that most of those stuff here have played out pretty well with the 933 stochastics. So for me, it's not an entry point right now. Two entry points possible. Either if it stabilizes at around $51, $51.60, and then breaks out again, or if it pauses there, goes back down towards the low of this downward corridor, and take a look at the stochastics. Whenever you have a stochastic that starts to tilt towards the overbought situation, I'm talking of the 933 stochastics, then that will give you the go to get into that stock at the bottom. Now Dan here has a questions on ACRX. Time to buy at 438. So yesterday it was breaking out indeed. Now time to buy. Well, 438, 533. That's the target on that stock. For me, that's it. But yes, definitely there's some buyer's momentum on that stock. Yes, but for, as I said, 506, that former resistance there, for $5 will be the target on that stock. So from 473 to $5. Do you want to make that bet, make that try? That's the question you need to ask yourself. You don't have a 10%, which such level, but that's the upward potential that you have on a stock like that if you want to get in right now on it. Now, this is the list here of the best breakouts and breakdowns of the day. Concordia Healthcare on the healthcare sector, pretty nice. Momenta Pharmaceuticals also as well. There's a lot of tops here, but definitely that stock is confirming a higher bottom with the stochastics. Yes, so there's some upward momentum on that stock, and $21 your exit point. So that will be your exit point on that stock. Liberty Interactive, I think what we like with Liberty Interactive is on a yearly basis all this resistance that we're breaking out, and we know the longer the sideways formation, the better the technical signal that is coming out of it. The only thing is that it's making a new high while the stochastic is confirming a lower top. So that's called a bearish divergence, because normally we'll need to have a stochastic that's higher than this one here because the stock is making a new top. So for those reasons, I would say that that stock is not a go. Now for Google, nice breakout. Electronic Arts as well, pretty nice breakouts. United Healthcare also, well, yes, there's a lot of tops that's there, but that's the way I would say that you could start to build up your positions. Do not open a full position, but maybe going with a half, a third of a position. As for your exit point, I would not get out at 120. I would rather get out whenever I see the stock breaking that important support around 117. Yes, there's a big loss potential there, or more than at least 5%. But for me, this is actually the level I would like to see the stock breaking out. Conagra Foods, slight breakout, a timid one. So that's really if you want to have a medium to long-term exposure on the consumer staples sector, which is more stable sector. Darden Restaurants are one of the nicest breakouts there, clearly keeping a nice upward corridor. So we have some room to go before we reach the top of this upward corridor. And Red Hat, slight possibility to build up your long position on that stock after breaking an important sideways formation. But you see, most of those breakouts, though, even if they're making new high, the momentum is timid. So this is one of the reasons why you should not be in a buying spree today. Even if there's some exceptions that I've shown you, do not be in a buying spree. That's the safest, I would say, a strategy I would recommend. Now, as for the day trade of the day, it's that stock here, Xoma. Pretty nice performance. Now we see the stock is losing slightly some momentum, but we had two entry points, at least 2 or 3 entry points on a stock like that. Next entry point is towards 92 cents of 50, but that has been the best. But so far I see a clear negative top on the stochastics. So I doubt we could have that on that stock. It's definitely going to be victim of this wave of sellers that we have seen on the market. So continue to hold on to your bearish ETF with this market's decline. I think that right now, even if there's some stocks in the steel sector, some major caps such as Google, Facebook that could break out, I think you should definitely remain cautious. Do not open a full positions, but rather open half or quarter of a positions, because so far we cannot say that the bullish momentum that fueled, that allowed the markets to go up at opening, we cannot say that is something that's persistent, that's consistent, and that will allow several sectors to start a credible bullish cycle. So this is one of the reasons why we're continuing to remain patient, and we're not closing yet our bearish ETF, but we continue to hold on to them. So that said, see you at 12:30 on the Swing Trading Show tomorrow on DecisionPlus.com.